Good evening, everyone. Welcome to my month-end analysis for the precious metals market. I'm JR. Today's Friday, February 26th. After 5 o'clock, the market is closed. We're going to do a quick analysis, a long-term analysis. Very excited about this market, extremely excited about this market, and I hope you all are also. A lot of great things for the precious metals, I think, coming in 2016, also in the next few years to come. A lot of upside. Here's some of the articles here. UBS technical analysis. Give up on stocks this year and buy some gold. Mark Cuban sparks berserk bets on gold. Dennis Gartman. A lot of guys talking about gold right now, right? So if you've been paying attention to my analysis, you've seen me put this chart up. This is the gold to silver ratio chart. Finally, we've seen the breakout. I posted this chart about 4 months ago, again waiting for this level to hit for the gold to silver ratio to continue to go higher. It's been on a very tight uptrend, okay, since 2011, and as we can see, we have what's called a broadening formation where the highs are getting higher, the lows are getting lower. This is a very bad formation, is a bearish formation. I do expect these ratios to come down lower than 30. Again, as the ratios go up, precious metals go down, and as the ratios go down, precious metals trend to the upside, right? So I posted this. This was back in, this was actually 5 months ago, right? Let's press play on this, and finally we're getting the move. So it's really for the last 4 months, it's been really just trading a little bit sideways. Finally, we saw the breakout on Friday, I think it was, right? So there's your breakout. This is the target here, roughly around 86, 87. That will be the sign to buy a ton or as much silver as you possibly can. That's when I feel silver will see the high. If you've seen these charts, if you've seen my videos before, you've seen this chart. If you haven't, shame on you. Here is the buy areas. These are the sell areas. This represents the price of silver at the bottom, the ratios at the top. Okay, as you can see, when the ratios hit a bottom, the silver market usually finds a top. When we see a bottom in the ratios, we usually see a top. When we see a top on the ratios, we usually see a bottom on silver. So very clear opposite correlation here. So when silver back in 2011 hit a peak of 49 and 75 or 49.90, whatever that high was, the ratios were hitting a low of 30. Right, so basically 1 ounce of gold was buying you 30 ounces of silver. Currently 83 ounces of silver for every 1 ounce of gold. And again, we're looking for this to test this high part at around 85, 86 or 87. Would it go higher than that? I mean, you know, again, this is the formation. Technically, it shouldn't go any higher. And from the looks of the metals, it actually looks like the precious metals have found a floor. But again, I am expecting these ratios to continue to go higher. For the last couple of days, though, we really haven't seen the prices of gold and silver decline, versus we've seen the prices of gold and silver, of gold, go up pretty high, pretty fast. That's bringing the ratios higher, and gold and silver has not really seen the exponential moves that we have on gold, right? So let's go back to the charts again. I'm expecting these ratios to hit this area here. At that point, I'll find wherever silver is, that's the price I'm going to look for to buy silver. I'm looking at the ratios, right? Here's your gold chart. This is your gold monthly chart. What a tremendous move on gold. Testing this trend line, finding some resistance here at this recent high. If we surpass 1300, this is going to be a serious game changer, folks, for gold and silver. I am not expecting, simply because of these ratios that I just showed you, because I'm still expecting the ratios to go up a bit, I am expecting gold to pull back. I'm not expecting gold at this point to create another low. Can it? Absolutely. But even if it does, you're going to find some serious support down at this level here, because this is really where the gold market took off, roughly at around 975. I wouldn't expect a lower price than that. But as of now, I'm not necessarily looking for gold and silver to create new lows. We'll see what happens, right? A parabolic move here on gold. Again, I think I gave a recommendation here to buy it around 1050. If you took that recommendation, you did phenomenal. Took some profits, and again, it looks like the market is going to continue to try, or at least attempt to go back up to this high 1250 area. So far, the high has been 1260. So we've been able to surpass this very strong, significant support level here. Roughly around right there, right? So this is your level. Again, we're still above that level, and again, you still have some other levels here, this level, and can it possibly come back down here to 1050? Absolutely. Can it fall below that? Absolutely. At this point, we just want to see if this market is going to continue to go up from here, or if it's going to come back down to this area here. I do expect a little bit more of a dip, maybe come back down here to 1200. Right now, trading in at 1222, right? That's your weekly chart. This actually looks like a bullish pennant or a bullish flag. Okay, if this is indeed a flag and it breaks out to the upside, then we can easily see prices reach this level here, roughly between 1300 all the way up to 1450. But it would have to break that triangle. Again, this is called a bullish flag. If this breaks out to this side, the move that we're looking to have on gold would be a move this side from here to there, because this is where the market took off. So technically speaking, you can see the same size move that you're seeing from here to there. So you're looking for a move roughly up to here, minimum 1360. All right, if it breaks out of this range here, you can see a move very quickly, and at that point, you're almost 100% guaranteed that precious metals have found a floor, maybe come back down, retest this long trend line, and continue to go higher. Again, one problem with the precious metals is that when they take off, and unfortunately, if you missed it, you missed the boat, right? Let's look at silver prices. Silver, again, has not moved up the way gold has. Gold kept going up all the way, broke this nice trend line here for silver, but currently we're below that trend line again. So that does not bode well for silver. And again, I am expecting further moves down simply because those ratios currently are around 83. We're looking for those ratios to hit around 86. So we could see silver come back down to the low $14 levels, maybe do a fake out, maybe fall below this this recent low around 1360, 1375 until it breaks this level. No way to find out, but I do know this, that I will be buying if it comes right back down to this level. If I get stopped out around 1360, let's say 1340 or 1335, who cares? Because again, we're looking to buy it at a lower price, and again, ultimately we still have our long-term positions anyway, right? These are just short-term trades, but again, for longer term, you buy here at silver. Look at this monthly chart here for silver. I mean, what a phenomenal buy. I mean, you don't have to look at charts to realize that this is what the market's doing. Find some support here, broke below this level here. At this point, still finding some support in this trend line here. Okay, so we could see a move back down to, let's say, 12 or maybe even $11. We also have another level of support right here, roughly right there. So the question is, if it breaks down below 1350, is it going to go to 1190, find some support, or 12 even? Or is it going to go down to the $10 range, maybe 1010, 1050? Overall, you have to be able to look at this chart and say this is a tremendous chart. This is looking like almost like a wedge. It's wedging right here, so a break to the upside or to the downside should be big, and it should bring the prices down to minimum $12. If it falls back here, I mean, at that point, I would assume the ratios would be around 85, 86, 87. Maybe even if they hit $14 flat and gold continues to go higher, or gold doesn't move from where it is right now, again, these ratios can hit 85, 86, then at that point, $14 would be the signal to buy. $14 would be the price to buy. Ultimately, I'm not really worried about these prices more so than I am the ratios, okay? There's your silver chart right now. Again, beautiful chart here for silver. Let's look at platinum. Platinum is another one looking very robust. Platinum broke its long-term trend. Since 2014, we've been trending down. Finally, a really nice break to the upside. I'm very much expecting a bottom on platinum. Again, I don't expect to create new lows. Again, we can have fake outs where we see, let's say, 790 or 800 below the most recent low, which is roughly around 808 or 809. If we see those levels, I can't imagine they're going to be long-lived. I would assume that the market is going to find some tremendous buyers at that point, and the market is going to change courses and start heading higher. The gold to platinum ratios is also suggesting the same as gold to silver ratios, right? All right, that's your platinum trade. Another great buy. Platinum and silver, I like them better than gold simply because of the ratios. All right, let's look at the Dow Jones. Dow Jones, this is the Dow ratio to gold, right? How many ounces of gold can you buy with the Dow? I posted a video not too long ago, actually 3 months ago, and I said that 17. I called that the high, and by all means, that's what you saw. You saw the prices go up to 17, and now currently they're 14. I'm expecting the gold, historically speaking, before the major crash or during the crash, what you're going to see is you're going to see the gold to silver, the gold to Dow Jones ratio, or the Dow Jones to gold ratio. You're going to see it at 2-to-1. Again, also forming a broadening formation where the highs are getting higher, the lows are getting lower. So on the Dow Jones versus gold, I am expecting, last time we saw 1.5 or 2, I'm expecting this time 1.5. So as crazy as that sounds, I do expect the price of gold and the price of the Dow Jones to be at par, probably within the next, I would probably say year to 2 years. Definitely within the next 2 years. That's my analysis. I could be off. We'll see what happens, right? That's about it. I really went over all the charts that I wanted to show you guys. I hope you guys really understand that this is a pivotal point in our economy, in our time. Japan, I can go on and on. There are no countries doing well right now. The price of gold will go parabolic. The reason why silver prices did this, okay, in 2011 is because this is what happens when the market doesn't understand what's happening and they panic. You start getting into safer assets like gold and silver. So this is what I'm expecting on the silver market, a parabolic move to the upside, an exponential move to the upside. And again, when you look at risk to reward, why not get in here? $14, $12, $11. You buy, let me tell you, silver prices go down to $10. You buy 10,000 ounces with $100,000. Your downside is that if it goes to zero, you lose your 100,000. Now, is silver going to be worthless anytime soon? I highly doubt it. With the expansion of money, I could only expect that silver prices are only going to continue to go higher. So again, your downside would be $10. Your upside would be $50, $100, $150. So again, I'm very excited about this market. I hope you are too. This is the time to start getting in. This is the time to look at your portfolio, see what's performing, see how much more legs the Dow Jones has versus these metals. When these metals take off, they're going to go parabolic. I can't wait. And I'm excited that everyone's with me in this journey. Very exciting, and I can't wait. See you guys next time. Bye-bye now.